right, good morning, everybody. So today we're getting the FOMC minutes. For the most part, Powell has already come out and kind of given us the broad outline of what the minutes are going to carry. But there's little things, like who voted on what? Was there a disagreement on a particular decision that was made? There's these little nuanced parts and pieces that are in there, but it's a curated list, right? Like they sit around and decide what needs to go into the minutes and what isn't going to go into the minutes. And then it's a little bit like a Rorschach test. So if you think about, the classic iconic ink blot for psychologists, they tell you, look at the blot, tell me what you see. And it's this tool designed to give you an idea of what is really weighing on the back end of your mind, right? Subconsciously, what are you thinking about? When it comes to these FOMC minutes, if a trader is already bullish and they read those minutes, they can find things that will help convince them that their bullish bias is solid and that they've got every reason to be exuberant. On the other hand, if you're already bearish and you're just looking for an excuse to sell stuff and dump it down onto its head, then you can read into those minutes a lot of negativity, and you're going to find all the ammunition you need to convince yourself that it's time to short this thing. It has a little something for everybody. So we want to see how those minutes are absorbed by the market today. Is it really looking for an excuse, right? And that's a phrase we've used before, a market just waiting for a sell-off, right? We're waiting for a reason to break out and run higher or dump down and just give it all back. When we're in that kind of mood in the market, it doesn't really take much of a catalyst, right? They just pick something out of the wall of worry, and that becomes the narrative or the reason. We've got a lot of speakers still. If you read on a Finance Juice, the European market wrap, they were doing a nice job summarizing all of the negativity from around the world, which was basically their narrative for the day, right? That we have this debt ceiling unresolved here in the US. In Europe, crazy super high inflation isn't done yet. They're going to have to keep raising rates. And, speaking on that, there's this global curve, right? And so if you consider Europe ahead of us and that, whatever shock waves are felt there, we're going to feel it here along the curve within 6 to 9 months. I'm sure that my time frame is not accurate and not right, but I'm going to just use that number because we need a place to start. So if they're 6 months ahead of us and their inflation readings are showing that after all the work that they've already done, it didn't tamp anything down, it didn't shut down this runaway inflation, and now they're back to hiking. I say back to hiking, but I don't think they really stopped. Then we as well very likely are going to continue to see elevated inflation readings and a Fed that won't be cutting, but instead will be raising rates even higher. So the market didn't like that. Then they've got the deteriorating economic situation over in China. If you remember about a year ago, everybody was talking about how China was going to be the reopening trade because they were still doing lockdowns while the rest of the world had already taken COVID shots and was getting back to business. And so they had all that pent up demand and capital to spend on the expectation that when their citizens did finally come out of lockdown, they'd be spending a lot of money. And that was something everybody was positioning for. Didn't really follow through the way that they wanted. So a whole list of things kind of adding to that wall of worry. We have speakers today, including Yellen again and Fed's Waller. But then we also have Christine Lagarde from the European Central Bank. So big names. We got Bailey from Bank of England already done. I think you can scroll down and find his posts. Big names today that have the capacity to screw up, right? Don't forget that they could absolutely just straight put their foot in their mouth and say something inappropriate that they hadn't intended to say. There's always that problem. But then there's also the idea that they may start beating on the same drum and trying to convince the market that they're really not going to cut rates yet. So watch the clock, keep your eye on the news feeds, something like Finance Juice that will let you know when there is somebody speaking and that the person speaking may say something. At the very least, it can warn you to reduce your position and tighten your stops when you know that someone's getting ready to chip teeth. And be prepared for a big move, right? If the debt news comes out today, right? If they say, screw it, we're not going to make it, market's going to react. Or, hey, I think we made it, market's going to react. So be prepared for that, right? Just I would never recommend that you trade without a stop. But on a day like this, I would recommend that you absolutely use the stop. So use your stops. There's always the horror story, right? And I think we've all got one. I was working in my office. It was one of those slow afternoons. The market, it was all pre-COVID. So, you know, like an 8-point day where the market was just really tight ranged, wasn't doing much. And a non-voting member of the Fed made an offhanded comment to a reporter, and the market exploded and ran me over. And no, I didn't have a stop on. It was one of these slow days where the market wasn't moving hardly at all. So, you know, I didn't have a stop. Yeah, that sucked. By the time I made it back to my computer, because even though I was in the office, I wasn't at my desk, and got that trade shut down, the consequences were devastating. So on a day like this, on a week like this, where we're waiting on this news, if you're not the kind of trader who uses a stop, consider using a stop today. Consider using a stop all the time, really. For futures anyways. Options, they're their own animal. All right, volume today. We are finally back into the hundreds, where we've been seeing, you know, 63 and 88 and these less than triple digit values. Now we're in the 120s. We had a very narrow IB, broke down through that. Now we've expanded with an inside day breakout. It is more of yesterday, right? It's a continuation of the breakdown. But it's not like all of this was very much of a surprise, right? We had already discussed the megaphone pattern on Friday and Monday, the idea that we would expand lower and expand higher again while the market waits for this information that it is looking for on the debt ceiling. And that's exactly what we're getting. The volume's a little high. If we were looking at this on the idea that there's some economic news on the agenda, because we would expect the market to sit and wait for that news to come out. But as you can see from the 125 in volume, the market's not sitting out, it's not waiting. So it doesn't see anything between now and 10 as a danger or a threat, right? And really it's between now and 9:30, but 10 is the next econ event. So it's better to say it that way. The market doesn't see a threat this morning from an economic data release. If it did, it would still be sitting out. The 21-day ADR is nearly 1.25%, and we've only moved 0.4%. So we've got a long ways that we could travel, right? More than 0.75% still that we could make a move. from our current location. The ADR half to the downside is 41.32. It's amazing how that just lines right up on a cog line. Like magic. The next level is 41.06, not a cog line, but really close to one. 41.0693 is where the ADR full is at, and the cog line is 41.06 flat. So imagine that. It just coincidentally lines right up on our pivot points. We do have a voodoo line down here at 41.40. So the current Globex low is sitting on a voodoo line. And if we break through that, we have the previous week's low at 41.20. Day 30-minute volume profile, we are getting closer to the point of control, which, it's not much of a surprise. It was kind of the whole point, right? When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. Along the way, we're going to cross through the point of control. It's where the greatest amount of volume was by price. All right, so 41.3650. This isn't support. So when we get there, we don't have an expectation that it's going to hold the market. And in fact, once we start getting a little close to it, it nearly becomes like gravity or a magnet, and it will just pull price there. We moved through the shallow areas relatively quick. So you can see how we made the fast move up and the fast move down, and we really didn't hit much on the way. There's not a lot back here, right? All right, so that VPOC that we marked from last Thursday is done. We can go ahead and take that off the table. I'm just going to take the line and use it for yesterday. We have a VPOC now from yesterday. $41.93. All right, well, we don't have one down below until 40.77. So a long ways off in that direction. It is worth noting how we haven't really spent much time down here. And yet down here where we're currently located in the ES is where all the volume is. We have more volume there than we do anywhere else. And since it's the current day, we can actually put a TPO on. So this is saying we've spent the most amount of time at 41.63. And yet we have the most volume at 41.43. The perspective out of that is that we've run down and we landed in a pool of volume or orders, transactions right down here. So, kind of game it through what it looked like. Price broke out of that shelf, headed to the downside, and hit a lot of volume. Pulled back, wasn't able to make it through there. Made another run at it and hit even more. And now between those, it is where the greatest amount of volume is located, even though we've spent most of the time up there. Now, if we were to put on like a footprint chart or a TPO chart, we could actually, see exactly where that volume was, if it was in the first bounce down there or if it was, through the second one. Just a second. All right, that 4150 was a pretty big deal. Yesterday it became pretty obvious pretty quick that that's where we were headed. And it didn't disappoint. And the thing is, we could do all the TA on this, and it would still come down to whatever news comes out. Because it's just that sort of situation right now. All right, so as you can see, we've got a lot of moving averages here, all tangled up. Between the 4-week and the daily 20, the hourly 10. We got the 10-week right below us at 41.32. Remember, that's a cog line. So that's yet again today, another spot where I stopped and said 41.32, right? Remember, when we get our levels from multiple locations, those levels begin to carry even more weight. We got the spot gamma level, 41.49 and 41.83. 41.13, which is really close to another cog line, 41.11. But to get to 41.11, we've got to get through the 50 SMA, the 50 EMA, the 10-week. It's going to be hard to get through that 10-week. But right now we're really tangled up in all these moving averages, and they're worthless, right? They're not support, they're not resistance, they're not helpful. They're just distractions. Because we've crossed through all of them too many times. All right, so Bitcoin's down 1.7% this morning. And Semiconductors are right behind that, followed up with the K-Web constituents. So, it's looking pretty negative out there, and financials uh, below that even. So we don't have financials, we don't have semiconductors, we don't have the China ADRs, we don't have Bitcoin. And that's been a large part of everything that we have been looking at for a market that's doing anything at all. Things that are up this morning: retail, gold, bonds. Now, I say bonds, but it's close. They're nearly at that 50% mark, right? I need a 0.5% before we want to consider that something is up or down. So we talked about yesterday morning how bonds needed to really turn things around. So far, it's doing pretty good. I'm really pleased um, with the outcome. But this is just a starting point, right? It really hasn't gone anywhere. It just quit falling. A great start, but the S&P obviously didn't. So yesterday we talked about it was likely that we were going to see stocks and bonds moving up together, and we didn't get that. If bonds are leading the path, so to speak, then we'd be looking at the S&P to begin that turn at some point today. That's not really useful though from like a trading perspective, right? It's too vague, it's too generic, and we need to be able to pin that down better. One of the main things that I'd be looking for though is that we still aren't looking for bonds and stocks to do something different, right? Although that's their default most of the time, right? Bonds usually are going up, stocks are going down, or bonds are going down and stocks are going up, usually. But it doesn't have to do that. So what I'd be looking for here is not necessarily that the bonds begin to go back down, but that they either hold their range or even begin to move up, whether or not we begin moving up in the S&P or not. So a little bit more of yesterday. We want this base to hold and for the low to be in that 176. All right, so here's ZB on the daily with that 127.10. So a really nice turn here. Things are starting to look, pretty good. We've got our Linreg line starting from the last swing high, swing low. From a low risk entry perspective, getting in along these lows for a run back up makes sense. There's just nothing else that says we should be going long in this other than the fact that it fell that far. Like really, that's all we got. Nothing else says that we should be expecting a move in bonds to the upside soon. TLT, still got that 100 line in the sand. If you remember yesterday, we talked about a gap down and the rally back up and how that's exactly what we were looking for yesterday. That it needed to be a part of the narrative and that they really needed to come in and defend that. But it was supposed to come with a move in the ES as well, and we really didn't get that. All right, really big topping pattern in the Dixie, big topping pattern in 10-year yields, and a big bottoming pattern in the bonds. So we want to let this finish up, right? Complete the move. We don't want to see things continue on that same path, right? So dollar breaking above and going higher, 10-year breaking above and going higher, and bonds breaking down and going lower. That's not what we want to see. Now that the turn has started, it needs to follow through. So bonds continue to move up. The dollar continues to hold the line or fade, and the 10-year to move down. We want to have that as the backdrop so that whatever else we're trying to do in the ES or in equities or anywhere else, that we still have this doing what it's supposed to do. Looks like we're gonna get a new push away from VWAP. Yeah, do it. All right, looks like Bitcoin's starting to break down. Got a pretty good size gap this morning. Well, Amazon's up this morning. I was looking around at, Shop, Costco, Target, Walmart, seeing if they were getting any flows, and they're really not. They're down or they're flat, or they're just not moving. But Amazon is, so it's kind of throwing off the yoke, right, and doing its own thing. Might be worth keeping your eye on Amazon today for an opportunity. Inside day breakout above 117 makes sense. If we got our test on the 10 yesterday, that 113.39, we didn't actually get there, right? We got around that 114 and bounced. But it would be kind of the picture of a bounce, right? Say this run and a move towards the 10 that didn't actually get to the 10 before running up. And now a new run down, didn't quite get to the 10, and another run up. So a break above 117 would be a break above yesterday's high. And you could focus on, say, getting back up to the top of the range, that 118.75. It's not bad. It's a kind of a really small TRB. looks like Amazon had a little bit of news. That's why it's bucking the trend. All right, XPEV had some results the market didn't like. So it might hit all those other ADRs, right? That those China ADRs like Neo, Lee. I know we had the volume this morning at 125. There's really nothing else moving. All right, so we got a lot of biotech names in here and software. Third in line. Maybe software's third and semiconductors are second. Sure seemed that way, right? So biotechnology is certainly number one on the list of what's in here this morning. Pre-market movers, 117 names. Pharmaceuticals and biotechnology, then semiconductors, and then software, IT, right? And behind that, your financials. Oh yeah, I'd say that's up a little bit this morning. Closed at 154 the other day. 155. Closed yesterday at 5. All right, thanks with the analyst rate change this morning. By market cap, right? I really don't want to mess around with those penny stocks and junk names. Datadog, Deer, Lowe's, Inuit, CVX, and Amazon. That's about it. I mean, until we get the news out, it's very likely going to be that we continue to see equities drive and indexes pause, and it's going to be a hurry up and wait. So watch the clock. You got additional auctions today. You got the Fed minutes at 2 and a lot of Fed speakers, including Yellen. Right. And everybody's generally going to hear what she has to say. They're really going to listen to her now because she's the one counting the pennies, trying to figure out when the US no longer has any money in the wallet. Everybody be careful, be safe. I'll see you all tomorrow.